Hey guys, exciting day on the YouTube channel. We have a guest speaker. Akram's going to do a balance sheet, a classified balance sheet. This one's a little bit more complicated than some of the other balance sheets that we've done. We went over this in class, but Akram's going to walk us through it on the YouTube channel. So here we go.
Hey, what's up, guys? Okay, so we are trying to do the E3-5 problem at page 141. We have some data from the problem balance sheet. Okay.
Just read that.
Okay. Let's start. Okay, so we have the additional information about the land. Part of it will be like as a long-term, actually land and property asset, and the remaining 20,000 will be a long-term asset because it says here like land being held for speculation. Second point, we have the securities of 44,000. Half of it will be like a current asset because the company plans to sell it within the next 12 months, and the other half will be long-term or investment asset because they plan to keep it. Third note in the problem for the note payable of $250,000. Part of it will be a short-term liability for $100,000, and then the first 50,000 would be also short-term liability. The remaining will be long-term liability. So if we fill in blankets here or in spaces, we'll have cash for 25,000 and account receivable will be 56,000. Although if we go here, we'll see this note in the table, allowances for uncollected accounts. That means the company is expecting that it will not receive part of account receivable which worth $5,000. So we'll put it in minus value of $5,000, and the securities, the half of securities will be $22,000. Inventory, it will be the same, 81. We have the prepaid expenses of, should be down there, yep, 32,000, which will give us total current asset of 211,000. Now for the long-term assets, or you can call it investment activities or investment assets, we will have the second half or the second part of the securities for another $22,000, and from the notes here we will have another $20 of the land asset being held for speculation. It's another $20,000. Okay, now going to properties and equipment, we will have the land, which will be the remaining balance of 120 less the 20,000 land value for speculation. It will be 100,000. Buildings, as you see here, worth $300,000 less the accumulated depreciation on them, which is 100,000. Also, we have the equipment worth of 75 less the depreciation. Oh, let me fix this. And for the depreciation, it will be 25,000. You can find this information on the buildings and accumulated depreciation on the buildings, also the equipment and the accumulated depreciation on the equipment from the table. This will give us total value of 350. Also, we have the intangible assets, which is the copyright net of amortization, I hope I say it right, which worth $12,000. Also, you can get this from the table here. Okay, so this will give us total of oops, sorry. Oh, my bad. Let's fix this glitch. It's the $12,000 plus the $350 plus the long securities and the total asset, which should be $615,000. Okay. Now going to the liabilities, we have the current. We'll start with the current liability. We have the account payable. It's mentioned here for $65,000. Okay, we have also, my bad, cut and paste. Yep. Deferred revenues, as you can see from the table here, we have deferred revenues for $20,000. This is a liability and not an asset because service is not provided yet, or the product is not provided yet. 20,000. Okay, for now we have the note payable here, which is $250, as I mentioned. Part of it will be current liability, and the remaining will be a long-term liability. Now, $100,000 is due in 6 months, and then we have another 150 note due in 3 annual installments of $50,000 each, with the first payment due in August 2019. So this means we will have $100,000 of current liability, and the first installment or the first payment of $50,000 would be considered as a current liability, which will make the total of $150,000. Oops. Okay. We have also the interest payable. It's here somewhere. Actually, it's not, but where? Yo, whoops, sorry, my bad. I just saw it. Enter, and this will give us total current liability of $245. Now about the long-term liability, we have the remaining balance of the note payable, which is $100,000. And this will give us a total liability of $245 and $100,000, and it will equal $345. Now for the shareholders' equity, it will be the same of $200,000 as mentioned here in the table. And we have total shareholder equities also listed here for $70,000. And this will give us total of $270. And when we combine both total shareholders equity and total liabilities, the result should match the total asset. Oh, 1 second. Again. And here we are, 615,000 for both assets and liabilities at shareholder equity. Okay, and now going back to you, Earl. Thanks, guys.
Okay, thank you, Akram. That was a great explanation of a classified balance sheet. Just to sum up what Akram said, the difference between this balance sheet and the one that I've done previously is that Akram's balance sheet was separated into long-term assets, current assets, property and equipment was added. Liabilities were also divided into current liabilities and long-term liabilities. And you might notice also that we included the depreciation on both the building and the equipment in this income statement. So, I mean, this balance sheet. So this was a little bit more complicated of a balance sheet, but I think Akram did a great job of showing how in a classified balance sheet you have to include both current and long-term items. So thanks very much, and I hope this helps on your test.